10,273.20 points, while Kenya finished last week's trading positive, although it was very, very marginal. In the Middle East, negative sentiment permeated most of the markets. Dubai recorded the highest reduction, over 1% from its index at intraday. Qatar was also down 0.57%, while Saudi Arabia lost 0.11%. Abu Dhabi, on the other hand, is on the green, added 0.63% as at intraday. Moving over to Europe now, stocks were muted in early trade as investors monitored rising COVID-19 cases around the globe. Well, let's hear more from that region with Ashutosh coming to us from Frankfurt Stock Exchange. Hello, Ashutosh. Good afternoon.
Good afternoon, Chimi. Thanks for having me.
Yeah, well, it's Ini, actually. Well, the highly contagious Delta variant of COVID-19 is fast becoming the dominant cause of infection in Europe, and that must be very worrying for the region's economy.
Well, it's a cause of concern, and that's the reason why it's weighing on sentiments in markets across the continent. And it's because the investors do realize that despite economic indicators showing that the continent is very much on a recovery path in the current quarter as well as in the past quarter, things could change rapidly if this variant is not kept under check. And that's the reason why there are all these concerns. And it could be worse for the southern economies, which are dependent on tourism economies such as Spain and Portugal. If you talk about Portugal, we've heard stories about these businesses which have actually ramped up investments, hired more personnel to be ready for this all-important summer tourism season. And now they're just being forced to count their losses. That's because there's been a rise in COVID cases, 70% of them because of the Delta variant. It has been put on, there's been certain travel restrictions now to Portugal, people coming from Portugal to Germany. They also have now restrictions. They need to be in quarantine. So yes, it's a little concerning, and that's the reason why the markets are actually nervous.
Well, the German Chancellor Angela Merkel has been critical of countries freely allowing tourists from countries seeing a spike in cases of Delta variant. And this follows what you just talked about in the region.
Yeah, it's frustrating, actually, and she voiced her frustration last week, and she chided the Portuguese government. She said that she regretted that there was no uniform regulations as far as travel restrictions are concerned. The member countries were devising their own rules, and that's the reason why it was backfiring, was the word that she used. We've seen rising cases in Portugal, and now Portugal has actually said that it is going to restrict travel to those people who are not fully vaccinated from Britain. She also, Angela Merkel also called out Greece for actually allowing tourists who've been inoculated with the Chinese and the Russian vaccines. These vaccines have not been approved in the European Union, and that's the reason why she was a little frustrated.
Well, away from that, Deutsche Bank has compensated a Spanish company for losses the firm made after purchasing foreign exchange derivatives from the German lender. How much do we know about this story?
Well, it's being reported that the Deutsche Bank has agreed to pay 10 million euros to settle the matter. It is related to mis-selling of foreign exchange derivatives to this wine exporter from Spain, Europe's biggest wine exporter, JGC, a Spanish company. The problem was that the derivatives actually led to millions in losses for this company, and it has actually filed a case against Deutsche Bank and also against BNP Paribas and Goldman Sachs. So these are the cases that are going on at this point in time. The 10 million payment is actually a result of an internal investigation conducted by Deutsche Bank that also saw the exit of 2 senior managers who were linked to those trades. We don't really know what impact would this settlement have on the BNP Paribas and the Goldman Sachs case, because both of them have so far said that they haven't really done anything wrong, and JGC was made aware of the issues that come with or the risks that come with these derivatives.
Well, there's always a chance for defense, we see there. Well, thank you so much, Ashutosh, and enjoy the rest of your day. We'll move over to London now, and Juliana already told us in the morning it's going to be a very data-filled week, but she's here to give us updates from the UK at this time. Hello, Juliana.
Hello, Winnie.
Yeah, so how's the market looking at this time? I know you said you did warn us it's going to be a very data-filled week. It's still the first day. What's going on in the markets?
It is. The FTSE All Shares started off a pretty subdued start at the morning, and it's extended those losses at intraday. Down, 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 red, red, red is the colour of the markets today. Just as you were discussing in Frankfurt, it appears as if inflation is off the cards and COVID is back on the cards. In particular, the Delta variant. Last week, we kind of had some signs from the British government hoping to get British holidaymakers on a flight to continental Europe, but those plans seem to be scuppered by the EU, in particular, as you were discussing, Angela Merkel, the German Chancellor, who's asking Europe to stand pretty much firm, even though Britain, of course, have had a very, very successful vaccination programme. The Delta variant, also known as the Indian variant, is really dominant within these shores. And so she's not happy that just because the British government say that they're ready for travel, that Europe should accept them. Again, Southern Europe depend heavily on British tourist makers, in particular Portugal and Spain. But now you cannot go to Portugal unless you quarantine for 14 days. So that's a massive, massive story. And that's really affected the markets, including IAG, the British Airways owner. Their shares were down by about 1.8%, as well as Ryanair, EasyJet, Wizz Air. All of the budget airline carriers this afternoon, are down between about 1.3 and 1.8%. Specifically, having a look at the numbers, the All Share is down 0.56% at intraday. FTSE 100 also down 0.64%, and the FTSE 250 is down by 0.25%. In the currencies market, the British pound is up against the US dollar by 0.23%, up against the euro by 0.19%, and up against the Japanese yen by 0.15%.
And shares in luxury fashion company Burberry has fallen by 6% after the CEO announced that he's leaving unexpectedly. Why is he leaving, though?
Yeah, 6% now, but earlier it was down by as much as 10%. Marco Gabbetti, very, very, very popular name for anybody that follows or likes buying luxury retail. He is leaving. He's stepping down as the Burberry chief exec by the end of the year. And he's actually got a new role for Salvatore Ferragamo, very, very popular. They've got beautiful shoes, Salvatore Ferragamo, very expensive, though. But, you know, his loss comes at a serious blow to the brand. The British brand had struggled previously before Gabbetti took over the post about 5 years ago now. But since then, under his watch, the market capitalisation for Burberry has increased by about 30%. As with all retailers, particularly luxury retailers, they had a bit of a hammer blow during the COVID lockdown. But their share price did start creeping up to the pre-pandemic levels, which is why I think there was such a shock when the group announced his departure earlier this morning. I suppose one of the good things is he has tried to make Burberry a little bit more attractive to a younger audience. So they're hoping as stores start opening and we can start getting our lives back together, you know, the emphasis and the renewed look that he's put into Burberry will continue furthermore.
Well, it seems we've not heard the last on the Greensill scandal. The UK's accountancy watchdog has launched an investigation into the auditor of Greensill Capital. What are they looking for now?
Yeah, we haven't got any information about what the Financial Reporting Council are looking for, but we know, as you said, Greensill have been in a very big scandal over the past couple of months. It collapsed due to a lack of funding, and of course, it kind of dragging former Tory Prime Minister David Cameron over lobbying issues. But it's much further than this. I know the Serious Fraud Office are also looking into Greensill Capital, and also they are looking into GFG Alliance. That's the big name that's run by the Gupta family. The Gupta family have got their hands in lots of different businesses, not just in Britain, but across the world. But as it pertains to Britain, the steel industry heavily rely on that finance. And that's one of the reasons why it is under so much investigation, because so many jobs could be at loss. Safri Champness are an accounting firm that have been doing the audits for Greensill Capital since 2016. So they were there for nearly 5 years. And so they're going to be probing, the FRC are going to be probing that accountancy firm. They're also going to be probing PwC, which I believe were looking into the accounts of another firm that were linked to Greensill Capital. So yes, the ongoing investigation has broadened, and yes, they are looking into a flurry of different activities.
All right. Thank you so much, Juliana, and enjoy the rest of your day. Well, moving on now, we go to Asia trading, where stocks in Asia Pacific were mixed in today's trade as trading of securities resumed in Hong Kong following a morning pause due to severe weather conditions. The Hang Seng Index was fractionally lower on Monday afternoon. Trading in Hong Kong's market resumed Monday afternoon in the city after an earlier severe weather warning was lowered. Hong Kong's exchanges and clearing announced earlier that the morning trade sessions of both the securities and derivatives market, including stock connecting trade, will be delayed due to a black rainstorm warning. Mainland Chinese stocks were mixed, with the Shanghai Composite 0.15% lower, while the Shenzhen Component gained 0.79%. Elsewhere, the Nikkei 225 in Japan slipped 0.15%, while the Topix Index sat slightly higher. South Korea's Kospi dipped 0.12%. Australia's stocks were little change as the S&P AX 200 hovered above the flat line. And in the U.S., futures contracts tied to the major U.S. stock indexes fell at intraday after the S&P 500 notched its best week since February, as well as a record high on Friday. Futures tied to the S&P 500 hovered above the flat line, and those linked to the Dow Jones Industrial Average rose 14 points. Nasdaq 100 futures also traded mildly higher. Stocks posted their best week in months on Friday as investors grew more relaxed about inflation, seeing the current price acceleration in the U.S. not a sustained economic threat, but as temporary uptick. The next major piece of economic data is the June jobs report, which the Labour Department is scheduled to publish on Friday. Investors will also pore over the June report for any signs of wage inflation as employers struggle to find workers to fill job openings and pandemic-era jobless benefits taper off in some states. Oil prices hit and then recovered from highs last seen in October 2018 this morning as investors eye the outcome of this week's OPEC Plus as the United States and Iran wrangle over the revival of a nuclear deal, delaying a surge in Iranian oil exports. Brent crude for August had slipped 16 cents to $76.02 a barrel, while U.S. West Texas Intermediate crude for August was at $73.93 a barrel, down 12 cents. Oil prices rose for a fifth week last week as fuel demand rebounded on strong economic growth and increased travel during summer in the Northern Hemisphere, while global crude supply stayed snug as the Organization of Petroleum Exporting Countries and their allies maintain production cuts. The producer group known as OPEC Plus is returning 2.1 million barrels per day to the market from May through July as part of a plan to gradually unwind last year's record oil output curbs. OPEC Plus meets on July the 1st, that's on Thursday, and could further ease supply cuts in August as oil prices rise on demand recovery. We'll take a break now. When we come back, we'll head over to the African continent. Do stay with us. It's still Business Incorporated on Channels Television. You're welcome back. You're still watching Business Incorporated on Channels Television. Moving over to South Africa now. The South African government has reversed a decision to run floating power generating ships on environmental grounds. Analysts say this is a setback for power supplies in the country and potentially the country's economic outlook. Well, let's hear the perspective of Matt Kindiga, Associate Practice Lead, Sub-Saharan Africa at Frontier View. He's in London and he's sharing his thoughts with us now. Hello, Matt. Good afternoon.
Hello, good afternoon. Thanks for having me on the show today.
You're welcome. So what does this mean for power supply in the country? And what does it reveal about the country's public procurement processes?
Right, so certainly it really is a major setback for power supplies in the country. And this is because one of the major advantages of these power ships is that they could be plugged into the national grid in South Africa very quickly. They required minimal investment in terms of infrastructure investment. So it was going to be quite an effective quick fix, and that has really been set back. So it does mean that we would expect to see power shortages remain quite a problem in South Africa, probably for the next 2 or 3 years. We wouldn't expect to see a meaningful improvement in supplies from Eskom, especially. Since the since the decision was overturned on environmental grounds, it can be overturned, but we expect this is unlikely, and it's also going to take a long time for a ruling like that to be overturned. In terms of what it means for the country's public procurement processes, it's a very important question because the president, Mr. Ramaphosa, has really been trying to build an image of trying to clean up government departments, make procurement processes much more transparent. But what this shows is that there's really a long way to go to making the system, the public procurement systems, cleaner, more efficient, more transparent. So I expect businesses might be a little bit frustrated that a decision this large, this important, could be overturned so quickly.
Well, another effort of the government towards power supply has been plans to allow private sector generate electricity. How soon can businesses see the positive effects of that?
Yeah, so this is another story that has appeared over the last couple of weeks, and this is, it's intricately linked to the story of the power ship. So the government has really surprised a lot of analysts by saying that it will allow independent power producers to generate up to 100 megawatts of power, which is larger than was expected. And it really illustrates how desperate the government is to solve the power shortage problem. Generally, we would say it bodes well for the outlook in terms of the prospects for power sector availability, dealing with the problem of power shortages, and generally for the economy. But I would emphasize that this is a longer term solution. And this is because we expect it to take at least 18 months from when the first license is issued and between when the first independent power producer will start generating power on a meaningful scale. And bear in mind, it will take a number of independent power producers to match the shortfall of Eskom at the moment. So certainly a positive development, but we wouldn't expect to see any meaningful impact within the next 18 months.
So how will all of this affect the economic outlook of the country over the coming years?
Yeah. Well, it's one of the major drivers of our view for the outlook for South Africa. It's been a problem since about 2008, so it's really been one of the major factors contributing to the country's economic malaise over the last 10 to 13 years. To put it into context, electricity generation has barely grown since 2015, despite the fact that South Africa's economy is larger than it was in 2015 and demand for electricity is higher. And this means that heavy industries, which are a source of export revenues and a major driver of growth and employment, such as mining and automotive manufacturing, really will continue to struggle with high costs associated with expensive backup generation capacity, but also the operational disruption associated with intermittent power supplies. So we also expect it to affect investor sentiment. Companies looking to make large capital commitments to South Africa are probably going to be a bit more reticent, given the ongoing nature of the power problem. So it very much contributes to a fairly moderate to weak outlook for the economy over the next couple of years.
All right. Well, thank you so much, Matt, and enjoy the rest of your day.
Thanks very much.
So we're still staying in South Africa because the government has announced another tightening of COVID-19 restrictions for 14 days as current containment measures are insufficient to cope with the speed and scale of new infections. Under the measures announced by the President Cyril Ramaphosa on Sunday, all gatherings will be prohibited. There will be curfew from 9 p.m. to 4 a.m. and the sale of alcohol will be banned. Schools will start closing from Wednesday, while restaurants will only be able to sell food for takeaway or delivery.
The situation has gotten worse. Along with many other countries on our continent, Africa, South Africa is seeing a massive resurgence of infections. And on the recommendation of the National Coronavirus Command Council, Cabinet has decided that the country should move to adjusted alert level 4. Cabinet decided that to ensure that our response is appropriate and proportionate, in other words, equal to the current situation, additional restrictions are necessary. And we are therefore announcing this evening that we will place these additional restrictions in place for the next 14 days. A curfew will be in place from 9 p.m. to 4 a.m. and all non-essential establishments will need to close by 8 p.m. The sale of alcohol, both for on-site and off-site consumption, is prohibited.
And moving on now, Sudan plans to cut its government spending and increase social spending after completing a raft of rapid economic reforms this month that threaten to compound pressures on the majority of the population. Earlier this month, Sudan fully removed subsidies on car petrol and diesel, and in February, it devalued its currency and began a policy of a flexible managed float. And South Africa and Mozambique have exercised their preemptive rights to increase stakes in Sasol Limited, which runs between the countries, displacing an earlier deal. South Africa's iGas and Mozambique's CMG plan to acquire a 30% share of the line valued at 4.1 billion rand. Sasol had agreed in May to sell the stake to a group, including a unit of financial services firm, Old Mutual Limited, in a transaction that was subject to the waiver or exercise of preemptive rights by the shareholders. That's it on the program today. Thank you so much for watching. I'm Ini John Mekwa.